Hello, this is the road to trying to make $1,500 every 10 days using $50,000. So, right now, here's all my positions. I am full $50,000 in. I was testing some things with commissions earlier today, and actually did not want one of these positions, but earlier last week I sold this call credit spread at 1655 and 1660. 2 days left to expiration, and as you can see, it's given us a nice negative number here, which is no fun at all. About down $925, something like that. And you go to our charts. We're sitting up here at 1649, the highs, and we can go to some more daily charts. And as you can see, this thing broke out this morning at 6:30 a.m. Broke above my highest levels. These are all standard deviation levels, and continued just to skyrocket up. You can actually day trade that as long as it's. And that was my microphone turning off. And then it finally came back into these levels and stopped there at the high, 1649.71, and is now trading within these ranges. And it's dropping right now, but when this levels start coming up here, it actually is a buy signal. So we will see what happens here if this thing bounces off 1647 or comes down to 1646. Now, right now, I'm a member of Simpler Options, and with Simpler Options, you get to go into a room and also look at Fibonacci Queen, which I found her work to be extremely helpful. Her support level is 1643, which is all the way down to here, and her target is 1652, so right up here. And we want that to, if it goes up, hit 1652 and then come rip roaring back down, because that's highly extended. And I've been all morning figuring out how I want to play defense on this. And my first line of defense is Hopium, because tomorrow the Feds are only putting about $1 billion into the market, which is a light day for the Federal Reserve. And so I'm hoping for a pullback tomorrow. And if this goes to zero, I will scratch the trade for zero or hopefully make a small profit. Now, again, that's Hopium. That is not doing anything of action. And you can come into this Analyze tab and see what I'm talking about. If this was real money, this is where you start getting nervous, because you see your money going downhill fast. This white line represents what the trade is today. This red line is what the trade would be at expiration. And so you can see over here, 514, 13, 517, 13. So this red line is going to stay at 600 all the way until we hit 16, let's see, 54 something. 1655 basically, and then we start losing profit. So we want that to stay there until Thursday. If we got out right now, we'd lose $983. So that is how a little something how you use this Analyze tool. And we can click for the date on 1615. Okay, if we were at this level at tomorrow, we'd only lose 769, so a bit better. So we're hoping for a pullback, and there's a few ways we can defend this. You can sell more credit spreads, which I put one on at 1625, 1620 for a little test. I wouldn't get this in my real account though, and that's what really stinks, you know, because no one's bidding on it at it's 0 cents, but they're selling it for 50 cents. And so watch, if I throw one in here and confirm and send it, it's actually gonna buy it for me. which I don't think anybody would buy that at this point. But I could be wrong. So we are going to be looking to put on defense tomorrow if this continues to go higher, and we'll be looking at a butterfly and some other things. Because you look at open interest, that means there's 36,283 people that have open interest here that either could, we don't know if it's calls or if these people have sold, if the market makers have sold positions here at 1650, and if they have, people are really going to try to push this down until the end of the week. So that's kind of what I'm dealing with right now, and we will revisit this problem later.